Hello and welcome to today's video on active versus passive mutual funds. In this video, we'll be discussing the differences between these two investment strategies and helping you decide which one might be right for you. What are mutual funds? But first, let's start with the basics. Mutual funds are investment vehicles that pool money from many investors to buy a diversified mix of stocks, bonds, or other assets. By investing in a mutual fund, you can gain exposure to a broad range of investments without having to pick individual stocks or bonds. Active mutual funds. Active mutual funds are managed by professional portfolio managers who make decisions about which stocks or bonds to buy or sell. They aim to outperform the market by using their expertise to select investments they believe will perform well. Pros and cons of active mutual funds. One of the benefits of active mutual funds is the potential for higher returns if the manager makes good investment decisions. However, the fees for actively managed funds are often higher than for passive funds, and the performance of the fund is dependent on the manager's skill and market conditions, which can be unpredictable. Passive mutual funds. Passive mutual funds, on the other hand, seek to track a specific market index, such as the S&P 500. Instead of having a manager actively making investment decisions, the fund simply holds the same investments as the index it tracks. Pros and cons of passive mutual funds. The main advantage of passive mutual funds is their lower fees compared to actively managed funds. Because there is no active management involved, the fees are usually much lower. However, the returns of passive funds will be similar to the index they track, so they may not outperform the market. Which is right for you? So, which is right for you? Active or passive mutual funds? The answer depends on your personal investment goals and risk tolerance. If you're looking for potentially higher returns and are willing to take on more risk, active mutual funds might be the way to go. But if you're looking for a low-cost way to gain broad market exposure, passive mutual funds could be a better option. Conclusion. In summary, both active and passive mutual funds have their advantages and disadvantages. It's important to do your research and understand the investment strategy behind each fund before making a decision. We hope this video has helped you understand the differences between active and passive mutual funds and which one might be right for you. Thanks for watching.